I'm Hunter. My colleagues and I operate a couple of blockchain investment funds. We launched our first venture, Crescent City Capital, in early 2019, which is a hedge fund investing in liquid cryptocurrency products on centralized exchanges. We've been operating that company for about 4 years, and then have added other capabilities. We have a mining power brokerage operation, and about 18 months ago launched our VC arm. So Acacia is investing in early stage blockchain projects. Really, our only mandate is that we have to be receiving a token investment. But outside of that, we've been invested across a wide variety of business models, verticals, protocols, and typically investing C to Series A, and looking to hear about interesting and the founders who are launching them. Quick question: when you talk about the dollar cost averaging strategy or any strategies, are these proprietary strategies that you have, like your IP, or is this an open source strategy that you would show to anyone?
So, I mean, we don't have a patent on the strategy on this first index. So,
Yeah.
and when I say dollar cost averaging, it's just you pick a cadence, right? Whether that's weekly or monthly. So that was just describe how investments are made through our platform. There isn't necessarily anything proprietary about the cadence, but the actual strategy itself and how it decides where to allocate capital. That is probably what you could point to as being proprietary in nature, because we have a series of algorithms that run based on the exchange that you select that are crafting an index, and the index will change based on the exchange you're connected to. So that's the piece that's somewhat proprietary.
Got it. And when you said custody of all coins on your exchange, that's not, you're not taking custody. That's on like Binance.
Yeah. So another thing we wanted to address, and I think in light of FTX and all the stuff that's been going on lately, we've all been taught, not your keys, not your crypto. So we are moving closer and closer to a product that offers full decentralization. Right now, we are not quite there yet, but what we decided to do was to not hold custody of any crypto and any fiat. So we leverage algorithms for trade execution. We have users generate API keys, grant access to those keys, and then come and plug them into our platform. So that way, our algorithms are only accessing your exchange account, your custodial wallet, and your exchange account, executing trades there. So nothing ever leaves your account. So we are not we're not a custodian. That way, if you want to immediately offload that into cold storage, right, for your own safety, you can do that right away. In the future, in which we'll talk about later slides, the plan is to add support for decentralized exchanges, to then create a solution that's just fully decentralized for someone that does not want to have to have anyone else hold custody of their assets.
Okay. Cool. Do you have what your rate details on the fundraise anywhere in the deck or separately?
Yeah.
Sorry, can you repeat that?
Details on the raise to the funds. Can you skip to that, Kevin?
Yeah. Quickly, just some traction. We've got a big community. We've been mentioning Yahoo Finance. We've got active users. Revenue model we've already talked about. We've also talked a little bit about ourselves as well. But this is what we're looking for as far as our pre-seed capital. Really, that 200K is a lion's share. That's about half of what we're asking for. And that's just going to all the new tech that we talked about, right? All the AI trading features, the institutional product, working on the foundations of that. A quarter will go to operations, not only covering, cloud running costs, which actually aren't that much at all, but really expanding our core team to help manage some of these new marketing goals that we have. And on the lines of marketing, we are working on an influencer referral program with some YouTube influencers in mind, which we think could really gain some momentum for us, along with the usual like search and social ads. And then like organically, we have this newsletter that we throw out to our customer base a couple of times a month.
Cool. Are you, when you implement this new institutional product, are you planning on changing to a fee model?
Yeah, when we eventually add institutional support, the fee model would be what we run with, just because it doesn't make sense to do SaaS, with large institutions. So that's still kind of being fleshed out. It would be a combination of AUMs and pricing based on like the assets that they're using our platform to manage. So that's something that we're still working on, but it would be a different model.
And this is the last slide on the deck. So we essentially skip forward here.
Cool. Well, I know we're coming up on time, and my biggest questions and things that I think about a lot are the regulatory aspect in terms of structuring. But it seems like you guys have a handle on that. When you think about like, is there a ceiling at which point you're going to of AUM where you're going to come up against issues with rebalancing or market liquidity or size?
That's a really good question. And to be honest, that's something that I think, not to put the cart in front of the horse. There's a ton of liquidity in the total crypto space. I don't think we're near or even close to a place where we would be concerned about moving the market and liquidity issues, primarily because of our concentration currently in the top cryptocurrencies. Now, if you were to go lower down the spectrum and start dabbling with lesser known altcoins, yes, that becomes a different situation. But one of the reasons we do focus on like these top 10 or so project is also because of liquidity issues. So highly unlikely that we get to a place where we are struggling with liquidity because we've grown too big.
Okay. Cool. I have a couple more minutes. I think my questions mostly revolve around the trading strategy and like rebalancing what your proposed fee structure will be when you convert over to institutional, and then also what your I guess if you have a go-to-market strategy in place for courting more institutional investors, if you've started talking to people like that yet.
Yeah, so as far as the institutions, like as we'd mentioned in the presentation, this is part of our longer tail strategy. We're still very early, framing up the fee structure and really kind of framing up our go-to-market. There's initial conversations that I've started having, but nothing that's really far enough along to where I can confidently share. But we're like in the weeds. It's also kind of like chicken and egg. We're raising capital so we can expand the product tool set so it's more attractive. And with any institution, again, there's going to be a ton of development just to retrofit our integrations to match whatever liquidity providers some of these institutions are using. So we're working on it. We're on the way. We're not quite ready to share anything quite yet on the institutional side. Okay. And you had another question you said on the actual index?
I forgot what I asked.
Rebalancing?
Yeah. What? So I mean, I guess that, but I guess you answered that sort of. That was my question. SaaS model. What does that look like?
Yeah. So these are quarterly or annual subscriptions. And so just straight, 30. How we've been bringing users in is a 30-day free trial, like every other SaaS business, and then we just incrementally build them from there. And yeah, it's pretty straightforward and simple. But we're trying to price ourselves to where we're in the middle of the competition. But I think based on where we're at right now, we're probably the best bang for buck offering amongst our peers. So yeah, straight SaaS, quarterly and annual subscriptions.
What are those quarterly subscriptions? How much are those?
So I think, if I'm not mistaken, because we had like we just launched our subscription business in the last several months, and we had like an introductory period where I think we were charging like $20 a month, and so that like ends up being like $60 a quarter or something like that. But as we continue to onboard new users, we would scale that price up a little bit. So we haven't quite landed at, I think, our max pricing for this current season because we're trying to incentivize more people to join our community.
Along with the new products that we're implementing as well, like that we talked about throughout the deck. that alone will give us reason to increase the price, because as it stands right now, there's a single product, but we plan to expand that by quite a bit.
Got it. Okay. Some more questions. I think that really appreciate the presentation. I think that you guys obviously have a great product if you've returned that much versus the other benchmarks over the last couple of years.
We're investing in it every week ourselves.
Yeah. Yeah.
We're just putting our own money into it because why not? We built it, right?
Yeah.
Yeah, I would love it. Any other feedback, if after this or whenever you have some time. Yeah, I'd love to get any other thoughts on the product.
Yeah, I'll definitely follow up.
Yeah, you can also set up a channel if you want. And I want to thank everyone. Hunter, thanks for staying longer, and thank you everyone for staying longer for these great presentations that we all have questions about them, but it's really a great start here. So we're going to be in the clubhouse. Follow that link from 11 to 12 or 11 to 12. See you guys there. Bye.
Thanks for your time, everyone.
Thanks so much.